Hey guys, it is Mark Cove for 31st of October, so wrapping up another month here, heading into the last 2 months of the year. I thought, an exciting week. On Sunday night, I started out with the preview and saying that I was going to look to be a buyer of EMinis and crude oil on the week into bottom edges, and we bought EMinis 2 days ago and have had a quick move. I've discussed the volatility here at length and how the increase in volatility has seen some pretty rapid movement in the E-minis. But let's just kind of look at the latest trade and how it's worked out. So again, getting back to the edge I've been focused on, again, it comes from bigger picture level down to the 2600 to about I think it was, well, I'd have to look at but I think it's 40s it comes into. So that was kind of the buy zone. So we saw this level on Monday. We saw the lows on it Monday. The trade was an initiation of a long trade coming into the futures open on Tuesday trade, so the 30th of October, and that was the initiation of the trade. So that was beautiful. In less than 2 days, it's seen a not quite, but almost 100-point rotation. We ended up taking profit at 27.10 today, so about a 70-point winner on the E-mini. So that's been really good. I mean, per contract, you're talking over 3,000 per contract. So it was a nice little move. But in looking at it, I said I want to look at that edge. It's a bigger picture move, and so the idea is that you're looking long side coming into the level, right? A lot of people with the momentum tend to focus on it, and they're just watching whatever has happened of late, and they're not really thinking about kind of the way it plays out. They're just chasing price. This is the level. So I talked about this on Sunday night. I played it on Monday, played it on Tuesday. Just took profit today. But this is where the level comes from. This is what the buyers were doing the last time at this spot. They were driving the market higher. I simply reacted in looking for edges down here the next time the market visited the same level. And again, you always have your stops in place. You always know what your risk is. But my risk is a move below this, right? My risk is a move below this. And there were levels below that you would have had to be concerned about. On a shorter term, that's what you're playing. So it is a wider zone. As you take that down to something tighter time frame wise, that's where you start to dial in and say, okay, here's where I can risk 10 points or 15 points, whatever the risk is that works out for you. And essentially, if that risk is too big point wise, you simply can't play, or you have to put a tighter entry. But this was the move again on Monday afternoon, Tuesday. Now we're into Wednesday's trade. So this is why I'm playing against that 30 zone, and that was just happened to be a real fast afternoon sell-off. And we've seen the buyers come back in, drive this market higher. Certainly some reversal late afternoon here in the U.S. market, but I've gotten the move, and that's really what we were looking for. Crude oil, I said I also wanted to be a buyer in crude oil against bottom edges. That's what I said I wanted to do to start the week. And there have been a couple nice rotations in crude, but let's again start out why you're looking at those edges. And again, the thought process is that you're going to have two-way trade, especially on an intraday and intraweek. There's almost always two-way volatility. Until this bottom edge gave way, I wanted to focus on bottom edge longs. And the two-way trade really looked like this. 67.70 was the level on top that we've been playing for several days, and then down to 65.80s on the bottom. And we got a couple nice reactions. One, a beautiful one today right after, or actually right into the weekly inventory level. So I called this yesterday. I called this a rejection of lower prices, meaning the market did not want to stay down at those levels, was bought back up, and I said you can go back and use this same level, 65.80 to 6600, as a buy zone, and that works really well today for a trade. And I think the big difference is understanding the timing of this stuff, using the level. But I'll just show you what it looks like as I get to a faster version. So this is just a 10-minute chart. I'm still doing the same work, focusing on levels, and this is that 65.80 area I'm working on. So this is just a tighter look of it. So this is today, 31st of October. This is the pullback into that. I think that was about 7 to 8 ticks wide. That was the pullback into it. That's 10 minutes to 10. And the reaction was not quite $1, but almost $1. So again, those are the short-term moves you're looking for. And you think about it, an 80, 90-cent move on one contract, it's pretty substantial for a short-term intraday type trade. Later in the day, we broke that level. Even on a fast chart. We broke that level, tapped back to it, and now the market is firmly below that level on even a 4-hour basis. We've yet to close today. There's still 35 minutes to the close of the day, but we've now broken it where I called it a rejection yesterday. The market it's no longer rejecting those lower prices. It is now accepting the market lower. So different look, more of a trend move here in crude oil. So not wanting to buy dips into this anymore. So that move was done, and now you wait for the next setup. Again, the sell side taking over here, sellers firmly in control in crude oil. All right, guys, so for Wednesday, we'll wrap it up here and look for a nice start to November. Cheers, and we'll visit with you soon.